Talk about a roller coaster. Bitcoin smashes through to a new all-time high, then bam, it plummets. And just when you think it's over, it comes roaring back. This kind of whiplash has the entire market on the edge of its seat, trying to figure out one single crucial question. So, what's the deal here? Is this big bounce the real thing, the start of another epic rally? Or is this just a deceptive trap, what traders call a dead cat bounce, before an even bigger crash? While the experts are totally split. So in this explainer, we're going to break down both sides of the argument and see what could be coming next.
All right, first up, let's dig into why the market feels like it's at this massive fork in the road. You'd think these big price swings would give us some clarity, but nope, analysts are completely divided.
That crazy drop, followed by that super quick rebound, has basically fractured the market into two opposing camps. You've got the bears, who are convinced the worst is yet to come. And then you've got the bulls, who are looking at this and seeing the buying opportunity of a lifetime.
Okay, so let's put ourselves in the shoes of the bears for a minute. Why are so many people so sure that Bitcoin has hit its peak and is headed for a major downturn?
For a lot of folks, it's pretty simple, almost textbook. A drop of 20% or more from the top, that's the classic definition of a bear market. It's a clear number, and it has a lot of traders saying, that's it, the bull run is over. But it's worth noting the source analysis points out this rule of thumb can be tricky with Bitcoin, which has done this before only to soar to new heights.
And you know, this bearish feeling isn't just on the charts, it's absolutely flooding social media. The whole vibe is so negative that analysts are saying they get attacked online for posting anything even remotely optimistic. That kind of pressure creates a massive echo chamber, making it feel like the only way is down.
But that's just one side of the story. Now let's flip the coin and look at the other argument, the contrarian case for the bulls. And here's where it gets really interesting. For the bulls, all this doom and gloom isn't a warning sign, it's a buy signal. There's this classic idea in the markets that when pretty much everyone agrees on something, the market loves to do the exact opposite. So all that fear, it could actually be the fuel for the next big rally. And this quote really gets to the heart of that contrarian view. It's a powerful reminder that herd mentality is a real thing, and often, the herd is stampeding in the wrong direction right before a major turnaround.
Now, the bulls aren't just betting against the crowd. They're also looking at the bigger picture. When you zoom way out, look at the monthly chart, that long-term trend is still pointing up. From that vantage point, this recent 20% dip doesn't look like a disaster. It just looks like a healthy correction in a much, much larger bull market.
I absolutely love this analogy from the source material. It just paints such a perfect picture, right? The bulls see all this volatility, these scary drops, as the market just trying to shake everyone out, get rid of the nervous investors before it makes its next big move up.
So we have two really compelling but totally opposite viewpoints. The bears are shouting breakdown while the bulls are whispering perfect setup. How in the world do you cut through all that noise? Well, it turns out analysts are watching one specific thing that they're calling the moment of truth.
And that moment of truth really comes down to this one key indicator on the charts, the 21-week exponential moving average, or EMA for short. In simple terms, it's a line that tracks the average price over the last 21 weeks. And for traders, it's a huge line in the sand. If the price stays above it, that's bullish. If it falls below, well, that's bearish.
And right now, that critical line, that battleground, is sitting right around the $98,000 level. So 98K isn't just some random number. It's the technical zone where this whole debate between the bulls and the bears is probably going to be decided.
So this sets up two very clear paths forward. The idea is that Bitcoin is going to push up and test that 98K zone. If it gets there and gets rejected and the price falls, that's a huge win for the bears. But if it can successfully punch through that level, then the bull market is back on, big time.
Okay, so we know the battlefield. We know the key level. What does this actually mean for someone just trying to navigate all this uncertainty? What's the playbook here?
The big takeaway from the analysis isn't to try and guess which way it'll go. It's actually all about patience. The recommended strategy is to just wait and see. Let the price move up to that key level and let the market show you what it wants to do. It means ignoring all the noise on social media, focusing on the probabilities instead of trying to be right, and just letting this moment of truth play out.
So, the stage is set. If the price gets rejected at this key level, it could confirm the bears' fears and trigger a much deeper correction. But a clean break above it could silence the doubters and send Bitcoin soaring again. The battle lines are drawn, and now the market waits.